The 2024 U.S. election is fast approaching. With it comes a familiar wave of uncertainty. Investors are understandably nervous. The political climate is tense. Deep divisions exist within the country. This election, more than most, carries the weight of unpredictability. Adding to this unease is the current economic landscape. Inflation is a concern. Interest rates are rising. The global economy is shaky. All of this combines to create a sense of anxiety for those with money in the market. No one has a crystal ball. It's impossible to say with certainty what will happen. But we can look at history. We can analyze the potential impact of different outcomes. And we can prepare ourselves for the potential volatility that may lie ahead. The key for investors is to stay informed. Don't panic. Make decisions based on facts and long-term strategies.
The events of January 6, 2021, sent shockwaves through the nation. The images of the Capitol being stormed were unprecedented. This event was a stark reminder of the fragility of democracy. While the stock market quickly recovered, the impact of that day continues to be felt. It highlighted the potential for political unrest to spill over into the financial markets. The possibility of similar events occurring around the 2024 election is a concern for many investors. The specter of January 6th serves as a reminder that political stability is not a given. It's something that needs to be protected and nurtured. The outcome of the 2024 election will likely have a significant impact on the level of political stability in the U.S. Investors are watching closely. They need to assess the potential for disruption, and they need to be prepared for any eventuality.
Political stability and market confidence go hand in hand. When the political landscape is calm, businesses thrive, investors feel secure, the economy flourishes. Uncertainty, on the other hand, breeds caution. When political risks are high, investors tend to pull back. This can lead to market volatility and economic slowdown. The 2024 election has the potential to be a significant turning point. The outcome could either solidify stability or usher in a period of uncertainty. Investors crave predictability. They need to be able to plan for the future. A stable political environment allows them to do just that. It allows businesses to make long-term investments, hire more workers, and contribute to economic growth. The 2024 election presents both risks and opportunities. The key is to understand the dynamics at play and make informed decisions.
Policy shifts and economic tremors navigating the investment landscape. Elections determine the direction of economic policy. Taxation, healthcare, infrastructure spending impact the stock market. The two major parties have different visions for the future. Investors need to be prepared for potential changes. Adjust portfolios accordingly. Stay informed about candidates' stances on key economic issues.
Sector-specific impacts, winners and losers in the election aftermath. The 2024 election will impact different sectors of the stock market. Renewable energy companies might benefit if the Democratic candidate wins. Traditional energy companies could face challenges under a Democratic administration. Healthcare is another sector likely to be impacted. Overturning the ACA could affect health insurance companies, hospitals, and pharmaceutical companies. The tech industry faces scrutiny over data privacy and antitrust. The election outcome will shape the regulatory landscape for tech companies. Investors should consider the election's impact on their sectors. Diversification is key to mitigating risk.
Section 6: Weathering the Storm. Strategies for investors in turbulent times. The 2024 election has the potential to be a bumpy ride for investors. But with the right strategies, it's possible to weather the storm and come out ahead. The most important thing is to avoid making emotional decisions. When the market is volatile, it's tempting to panic and sell everything. But this is usually the worst thing you can do. Instead, investors should focus on the long term. Remember that the stock market has always recovered from downturns in the past. Diversification is also essential. Don't put all your eggs in one basket. Invest in a mix of different asset classes, such as stocks, bonds, and real estate. This will help to reduce your overall risk. Finally, stay informed. Pay attention to the news and keep up with the latest developments in the election. But don't let the headlines dictate your investment decisions. By following these strategies, investors can navigate the uncertainty of the 2024 election and position themselves for long-term success.